While fear grips the markets and uncertainty clouds the horizon, smart money is quietly positioning for what could be an explosive rally. Today, I'm breaking down the latest market insights and revealing three stocks that could deliver extraordinary returns in the coming months. Tom Lee, head of research at Fundstrat, one of Wall Street's most accurate forecasters, especially during market downturns, just doubled down on his bullish outlook despite recent market turbulence. When asked about his previous S&P 5500 target, which many called outrageous at the time, Lee didn't just stand by it. He suggested his year-end target of 6,600 is still very much in play.
I do think markets are getting a little desensitized.
That's what I mean, yeah.
Yeah, and I think part of it is if someone had an investor hat on, not tactical hat, really good opportunities are emerging because the number of stocks below the 200-day moving average was like 15%. Historically, that's a strong buy signal. I mean, you're going to find a lot of bargains there, and the VIX got above 50, and it almost always pays you to buy the stocks when VIX is above 50. But in the near term, it's a roller coaster. I mean, it does feel like we're having a lot of zigs and zags, and even over the weekend. But to me, I think everything that happened over the weekend, including the Sunday further explanations, all of this is still unequivocally positive for stocks.
What's driving Lee's confidence? Inflation is moderating faster than expected. Core inflation month over month came in at just 0.0056, literally hitting a wall, as Lee put it. Even more encouraging, shelter costs, a stubborn component of inflation, are finally cooling to a 2% rate. This is exactly what we need to get inflation back to the Fed's 2% target. While some worry about the dollar's decline and rising yields, Lee remains unfazed, stating unless a weaker dollar and higher yields suddenly make the best companies in the world outside the U.S., I'm not concerned. The most important companies in the world are American companies. They've produced the best shareholder returns. Remember, 40% of S&P returns come from new companies every decade. Lee doesn't see that innovation engine moving overseas anytime soon. While others panic, this pullback has created what Bank of America calls a God-sent opportunity in select stocks. Years ending in 5 like 2025 have historically ended higher for both the S&P 500 and Dow Jones, a perfect 100% win rate. Let me walk you through three stocks that are building tremendous momentum beneath the surface and poised to lead the next leg higher. Stock number 1, Nvidia Corporation. The undisputed titan of the AI revolution has pulled back about 12% from its highs, creating a golden entry point for long-term investors. This isn't a story of weakness. It's a sleeping giant gathering energy before its next breakout. In fiscal 2025, Nvidia, ticker symbol NVDA, reported a staggering $130.5 billion in revenue, more than doubling year over year. The final quarter alone brought in $39.3 billion, thanks largely to the record-breaking ramp of the Blackwell GPU, the most powerful AI chip ever built. Blackwell offers 25 times higher token throughput and 20 times lower cost compared to its predecessor Hopper. That kind of leap isn't evolutionary, it's revolutionary. In Q4, it generated $11 billion in sales by itself. But Nvidia isn't just about data centers, even though that segment hit $115 billion in revenue last year. It's also powering AI in healthcare, enterprise, and automotive sectors. Its automotive revenue soared 103% year over year, while enterprise sales doubled. Meanwhile, global capex spending on AI infrastructure is skyrocketing. Countries like France and the EU are throwing hundreds of billions at AI initiatives, and they're all turning to Nvidia. This isn't just a chip maker. Nvidia is laying the digital roads for the intelligence economy. Stock number 2, Microsoft Corporation. Microsoft, ticker symbol MSFT, is quietly expanding its empire beneath the surface. In its latest quarter, Microsoft delivered 12% year-over-year revenue growth, and more impressively, operating income jumped 17% thanks to disciplined cost management. Azure, its cloud platform, grew 31% year-over-year, remaining a key pillar of the company's AI-driven growth. And don't forget Microsoft's unmatched software suite. The productivity and business processes segment grew 14%, even beating guidance. This isn't just about Word and Excel anymore. Microsoft offers a full-stack digital backbone for enterprises, which makes switching costly and loyalty strong. Its massive investments in AI infrastructure through Azure and deep partnerships with companies like OpenAI position Microsoft at the forefront of AI innovation. While others are still building use cases, Microsoft is already commercializing AI within everyday tools. From Teams to GitHub Copilot to Dynamics 365. Add in a rock-solid balance sheet with over $70 billion in cash, consistent dividends and buybacks, and the ability to invest aggressively in next-gen growth. And you have a company that's not only high quality, but one of the safest bets in AI today. Stock number 3, Broadcom Inc. While Nvidia might be stealing the spotlight, Broadcom, ticker symbol AVGO, is executing just as powerfully behind the scenes, and the numbers prove it. In its latest earnings report, Broadcom posted a record $14.9 billion in quarterly revenue, up 25% year over year. The real kicker? A staggering 77% surge in AI semiconductor revenue, which now makes up nearly half of Broadcom's chip business. What's driving this explosive growth? A perfect blend of AI hardware innovation and a booming software portfolio. On the hardware side, Broadcom is rapidly scaling up shipments of high-performance networking chips and custom AI accelerators for hyperscalers like Amazon and Google. These hyperscale clients are pushing boundaries with frontier models, and Broadcom is riding that wave, helping them scale up AI clusters with its next-gen Tomahawk 6 switch and working toward clusters of up to 1 million accelerators. But Broadcom isn't stopping there. It's also leaning heavily into software through its acquisition of VMware. The shift from one-time software licenses to recurring subscriptions is paying off, with its infrastructure software segment growing 47% year over year and boasting a 92.5% gross margin. Even more impressive, its VMware Private AI Foundation, developed in partnership with Nvidia, is letting enterprises run powerful AI workloads on premises, unlocking a whole new revenue channel. Yes, the stock has pulled back. Yes, valuation metrics are elevated, but what investors often miss is that Broadcom is no longer just a chip company. It's an AI powerhouse with exposure to both hyperscale infrastructure and enterprise software. The bottom line is act now. History shows that while March tends to be rocky, April and May have been up 78% of the time in the past 5 years. November historically posts gains 89% of the time. These aren't just numbers, they're signals, clear signs of a market primed for recovery. Tom Lee's analysis points to a market that's shaking out weak hands before the next leg higher. The fundamentals remain rock solid, especially in high-quality AI names that are building the infrastructure of tomorrow. As Lee put it, really good opportunities are emerging. This correction might just be the perfect buying opportunity before the spring and year-end rallies kick in. Don't let short-term fear cloud your judgment. The smart money is positioning now, quietly accumulating quality names at discounted prices. When this rally ignites, and it will, these 3 stocks could become the major runners of 2025. The question is, will you be positioned to profit or watching from the sidelines? Thank you for watching. If you found this video insightful, please like, subscribe, and share this video with others. Until next time, invest wisely and think long-term.